Alright. Alright guys, we're looking at the income statement for P Ming, right? This is sent to your email. It is question 1. Alright, so this is question 1. Now you see there we started out with our sales. Our sales was 265,800. Right? Then we minus our return inwards. Our return inwards there was 2005. When you minus the 2005 there, you get 265,300, right? So you get 265,300. Now you move to your what? Less your cost of goods sold, right? You move to your less your cost of goods sold. Now you have there starting with your what? Opening stock. Your opening stock there was 35,000, right? Your opening stock there was 35,000. Then you add your purchases. Your purchases is then added. Your purchases is 165,000. Next we add our what? Carriage inwards. Then you add your carriage inwards, right? Your carriage inwards of 5,250. Okay? When you add all three figures together, you get what? 205,450. So you'd have got 205,450. Next of which you subtract your return outwards. Your return outwards was what? 3,500. Now remember, before you can do this question, right? So you look at the question. The first thing you're supposed to do, you're supposed to match words with figures, right? You're supposed to match words with figures. So what you'll be doing, like what you see we have right there, right? You'll be trying to match the words with each of the figures. Right? So you use a line to match the words with the figures, right? You use a line to match the words with the figures as it relates to the question. Right? It is imperative that you do so that you don't pick up the wrong figure for the definition or the wrong figure for the details. So you got to match words with figures first. Alright. So we're now where the return outwards is. So you minus the 3,005. When you minus that 3,005, you get 201,950. 201,950, right? You realize that you bring it to the second column. That figure is now placed in the second column. Now below that, you subtract your closing stock. Your closing stock is found in your footnotes, meaning after the trial balance. Now your closing stock here was what? 51,500. Your closing stock here was 51,500. When you minus your closing stock from the 201,950, you get what? 150,450. That 150,450, right, is known as your cost of goods sold, which was previously identified in our lecture video, right? So you have 150,450, right, and that figure is known as your cost of goods sold. It is then subtracted from your net sale. Your net sale as it relates to this question was 265,300. Your net sales was 265,300, so you got to minus that 150 from it. When you minus the 150 from it, you get 114,850. That 114,850 represents your gross profit. Then we move into the section that we call add other revenue, right? So we're adding other revenue, or you could call it, or you could say we're adding other income. We know what our other income are, right? First off, which you have the rent received. Now, rent received there was 35,000, but there was an adjustment to rent received. If you're looking carefully, right, the adjustment there, if you look at note 6, right, if you look at note 6. So behind the question there, if you're looking at the question, right, so there are some dots there, so we note all of those. If you're looking at note 6, right, note 6 speaks to it. Now, note 6 there, right, as it relates to note 6, right, note 6 there, rent received in the question was 35,000, and you're supposed to minus 10,000. Reason why we're minusing 10,000, right, note 6 says what? Rent received was prepaid by 10,000. So therefore it means that the rent that you should have received for the period was 25 because they would have overpaid by 10. So you're making that adjustment, right? That is known as what? Prepaid revenue. Next you had what? Commission received. Next you had commission received, right? So next you had commission received Commission received there was 20,000. Commission received there was 20,000. Right? Commission received in the question was 20,000. And then you're going to what? Add the 5,000 to it, right? So if you look at note 7, in note 7, commission received was owing, right? So there was owing on revenue of 5,000. So therefore, that is why we're adding it back. So it simply means that the commission that you should have received for the period was 25,000. You got 20,000 because the information in the trial balance, the information in the trial balance represent what you would have received, or right? Represent what you would have received or paid within the course of the year. So you would have received $20,000 for commission received, but you should have got 25,000. Oh, you know you should have got 25,000 because when you look at the footnote, you realize that commission received, which is note 7, 5,000 is owing. So you add back that 5,000, giving you 25,000. Discount received there in the question 7,005. There's no adjustment as it relates to discount received. You're not going to find adjustment as it relates to discount received. Then below we have, in this question there was a reduction in provision for bad debts, right? In this question there was a reduction in provision for bad debts. If you go back and look at the bad debts and provision for bad debts lecture, you'll be able to understand that part. But let me just try to quickly explain it. So reduction in provision for bad debts. If you look at the question, remember that provision for bad debts is calculated on debtors. Now in the question, the debtors was 45,000. So in the question, the debtors was 45,000, right? And if you look at note 3, which is a third note, it says adjust provision for bad debts to 10% of debtors. So therefore, when you find 10% of debtors, you're going to get what? 4,500. When you find 10% of debtors, you get 4,500. But if you look at the trial balance, right? If you look at the trial balance, immediately after the commission received. So after the commission received, so when you go into the trial balance, we have rent received, commission received, next you'll see what? Provision for bad debts. So you're seeing provision for bad debts of $8,000. There was a provision for bad debts of $8,000, right? Now that $8,000 represent the provision for bad debts that was set from the period before. Meaning that the provision for bad debts coming from last year. Right? That was a provision for bad debts from last year. Now for this year, which is the current year, your provision for bad debts is supposed to be what? 4,500. Now when you compare, last year you needed what? $8,000 for your provision for bad debts. But this year you need what? 4,500. So therefore that represents a reduction. You had set aside 8,000 last year, but this year you only need what? 4,500. So therefore you have a savings of what? 3,500. Right? Because your provision for bad debts had reduced by 3,500, thus giving it a reduction in provision for bad debts, so 3,500. When you match the 4,500, which you would have calculated 10% of debtors, which debtors was 45,000. When you match the 4,000, right? Debtors was 45,000. 10% of 45,000 give you 4,500. When you match the 4,500 with the 8,000, you realize that provision for bad debts would have gone down by 3,500. So that represents a revenue for us. It's a savings. We no longer need 8,000, but we only need 4,500. So we have 3,500 as savings. All right. So you add that section there. When you add that section there, right, the 25 plus the 25 plus the 7,500 plus the 3,500 give you a total, which we put to the far right, of 61,000. That 61,000 is now added to your gross profit to give you 175,000. All right. Then we move into our what? Our expense section, right? So we move into the expense section. So we're going to list our expense. First of which we have electricity. Right? We have electricity. Now if you're looking at electricity in the trial balance was $10,000. But if you look at note 1, if you're looking at note 1, electricity, right? Electricity as it relates to note 1 was owing of 2,500. So it therefore means that if in the trial balance you have $10,000 and note 1 said that you owe 2,500. So it therefore speaks to the fact that your electricity for the year was 12,500. You paid 10,000 and 2,500 was owing. Right? So your electricity that you should have, that the company should have paid for the year is 12,500. And remember, in keeping with the accruals concept, revenues and expenditures are recorded in the period in which they occur, irrespective if you would have what? Paid it or not. So even though you paid $10,000, 2,500 is owing. So the electricity for the period is 12,500, and that is what need to be written, or that is what you need to take care of in the income statement. That is why we have a 12,500 recorded. Next we have our what? Wages. Right? Next we have our wages. Our wages there was what? Wages in the trial balance was 45,000, sorry. Wages in the trial balance was 45,000. Alright? Wages in the trial balance. So your wages in the trial balance was 45,500. So right? So please, that adjustment there. Alright? So wages in the trial balance was 45,500. So it was right 45,500. Now wages was prepaid of 2,000. So it therefore means that the true amount that you should have paid for your wages, you got to minus the 2,445,500, you get what? 43,500. So the true amount that you should have paid for the period, the amount for the period was 43,500. You have overpaid by 2,000. Next we insert our what? Bad debts, right? Our bad debts there, right? Now, there was no increase in provision for bad debts. Remember that we looked at it earlier, there was a reduction. So the reduction is treated as other revenue. If it was a case where provision for bad debts had increased, so therefore, in the question, you saw that provision for bad debts was 8,000, represent the amount that was set aside from the period before. If you had calculated 10% of debtors and you got 10,000, it would have meant that provision for bad debts would have increased by 2,000, and you would have put an increase in provision for bad debts under your less expense of 2,000. But that was not the case. When you calculate it, you realize that there was a reduction. Alright, so let us proceed. So you have the bad debts, 1,700. Next, you have your carriage outwards. So you have the carriage outwards, right? Insert your carriage outwards, and you have your discount allow. Put in the discount allow. Then we have our depreciation. So we had two assets that depreciate. The first one was our premises. Now it is done under what? The straight line method. Right? The straight line method, and you know with the straight line method, it is calculated on the cost price. So if you look in the trial balance, you'd have seen that premises at cost was 240,000. So all you did was to find 10% of that 240,000. You get 24,000. Next we have our what? Machinery. Now for the machinery, we are working it using the what? Reducing balance method, right? The RBM. You're using the reducing balance method. Now with the reducing balance method, remember that it is calculated on your what? Net book value. So if you're looking at the question, as it relates to your machinery at cost was what? 155. But the provision for depreciation and machinery in the question that follows immediately. Look at the trial balance. You'll see that provision for depreciation and machinery was what? 7,005. It therefore means that 7,005 was already written off. It had already depreciated by 7,005. So if you want to get the net book value, or if you want to find the net book value, you'd have to what? You'd have the 155,000 minus your 7,005 to get your net book value. Then you multiply it by the 10%. In other words, 155,000 minus your 7,005, which is going to give you what? 147,005. Then you're going to multiply it by 10%, and then you'll get what? 14,750, right? You'll get the 14,750. Now when you add all of your expense, all of your expense added together, you get what? 103,800, right? Now that 103,800 minus the 175 will give you what? 72,050, right? And that 72,050 represents your net profit. So you're going to minus your expense from your adjusted gross profit, which in this case was 175,000. And you get what? 72,050. Now we're going to move on to look at the balance sheet. So we'll be doing the balance sheet. Alright. Now we're looking at the balance sheet, right? Looking at the balance sheet. So again, we put the person's name at the start. Then we have balance sheet as at the 31st of December 2006. Alright, so the balance sheet we would have been exposed to this when we were doing the depreciation and bringing the accumulated depreciation and cost price and the net book value to the balance sheet, right? When we did the balance sheet extract. So that is the first part. So our premises there was what? Our premises was 240,000. The accumulated depreciation for premises was 40,000. Now let us quickly think back. How did we get that 40,000? If you look back in the question, you realize that depreciation charged for the year, right? If you realize, you'd realize that the depreciation charge for the year, which you would have placed in your expense, the depreciation charge for premises was what? 24,000. But if you look at the trial balance, you realize that what? Provision for depreciation on premises was what? 16,000. So 16,000 was charged for previous year. And this year you charge what? 24,000. So when you add both figures, the 16 and the 24, that gives you 40,000. So the accumulated depreciation, meaning that the depreciation as at the end of 2006, which is the 16 plus the 24, give you 40,000. You minus that from the 240,000, you get net book value of 200,000, right? Likewise with the machinery at cost was 155. It was previously depreciated by what? Machinery was previously depreciated by 7.5, and then the current year for this year it had depreciated by 14,750. So when you add the two, you get 22,250 to be your accumulated depreciation, meaning your overall depreciation at the end of this year. Now that 22,250 minus from the 155 give you what? 132,750. Now guys, looking on the board, I realized that I did not add up the at cost column. You're supposed to add up the at cost column, put the total below. Also add up the accumulated depreciation and put the total below. But I'm in the midst of the video now, so I wouldn't be able to go and put those figures there right now, right? But you're supposed to those figures are supposed to be there also. The net book, add only total the net book value column, which give you 332,750. Next, we move into the current asset. Alright, so next we move into the current asset. Now the current asset section, we start with our inventory. Which inventory we're talking about? The closing one, right? Which you would have seen in your footnote. And it's the same. I remember that you would have used it also in your income statement, right? You would have also used it in the income statement. It was what? 51,500. Then you have your what? Debtors. You have your debtors. Then you would have subtract your provision for doubtful debts, or your provision for bad debts, right? Your provision for doubtful debts, which is note 3. Remember that you right, and your new provision for doubtful debts. So that is note 3, which is 10% of the 45,000, which give you 4,005. Again, if you go back and look at the provision for, if you look at the bad debts and provision for bad debts lecture, it should explain that there. Right, so it's so the new amount for the year, which is 4,005, is adjusted from the 45. So realistically, you're saying that you're going to collect 40,005. Next, we have our prepaid expense. So put in our prepaid expense. So there was a prepaid expense on wages for 2,000. That represents an asset to us. We had overpaid wage, so that is our money. It's the company's money that. Right, that is note 2. Then note 7, accrued revenue. So there was a commission received. So there was a commission received of $5,000. So the company is expected to get that money. So therefore means that it's an asset to us also. Then followed by our cash. Usually we would have put our bank there before our cash. But if you look at the question, you realize in the trial balance, you realize that the bank balance was on the credit side. So the bank balance was on the credit side. So the fact that the bank balance was on the credit side, it therefore means that it's an overdraft. So it cannot be placed under your current asset because it's a liability. So you insert your cash balance. Now when you add up the 51,500 plus the 45 plus the 40,500 plus the 2,000 plus the 5,000 plus the 7,500, you get 106,500 to represent your current asset. So the total of your current asset was 106,500. Then you move to your current liability. Started off with your creditors. Another name for your creditors, guys, is accounts payable. So if ever you see in the question accounts payable, they're making reference to your creditors. Another name for your debtors, so your debtors can also be called accounts receivable. So if you see the word accounts receivable or receivable, it is speaking about your debtors. Alright, let us continue. Alright, so therefore you have your creditors, which is 27,200. You have your bank overdraft, it's a liability, 24,500. You have your accrued expense, which is note 1. Right, you have electricity. Electricity was owing, so therefore you owe it. So it's a liability to the company. We owe 2,500 at the end of the year. And we also had what? Prepaid revenue, right? So we had collected what? $10,000 extra in terms of rent. So we owe that to our tenant. So that's the liability to the company. When you add up all of your current liability, the 27,200 plus the 24,500 plus the 2,500 plus the 10,000, you get what? 64,200. Now when you minus that 64,200 from your current asset of 106,500, you get what? 42,300, right? So you get that 42,300, right? So your current asset minus your current liability minus your current asset give you 42,300. Now that 42,300 is known as your what? Working capital, and that is the figure that you add to your you're going to add to your net book value. And your net book value, the total of your net book value there was 332,750. So when you add those two figures, you get 375,050. Right? You get 375,050. Now we can now move to the what? The finance buy. Now the finance buy is starting out with our what? Capital, otherwise known as our what? Equity. Now it was what? 250,000. Next we add our what? Net profit. Now the net profit there was what? 72,050. Where is it coming from? This is coming from your income statement. So the last figure that you would have calculated in your income statement. That 72,050 is the same figure you carry back here in your balance sheet. 72,050, right? It is added. When you add it, you get 322,000. You get $322,050. Alright, you get $322,050. Next, you gotta what? Subtract your joins. So you take away your joins. And your joins in this question was 27,000. So you minus the 27,000. Now when you minus the 27,000, you get what? $295,050. Right? You get $295,050. Now, as it relates to this question, there was a long-term liability, and your long-term liability there was loan. So you're going to add your long-term liability, and there was a long-term liability of loan for what? 80,000. Right? So you add that 80,000 there. So 80,000 added to your 295,050 give you back what? 375,050, which is your total asset. Now, if you realize you have the arrow there pointing, right? In your you're not supposed to use the arrow there, but I'm just use the arrow there to show you that both of those figures should equal, right? So that 375 at the top right there, which is represent your total asset, it's got to balance back with the total of your finance by section, which gives you the same. All right, which gives you the same. So this is pretty much it, class. This is pretty much it, right? It is the question is sent to your email. There are 5 questions in your email. All right, I'm suggesting that you do those questions as practice question to get an understanding of how you do your income statement and balance sheet. And of course, if you have any question, I'll make myself available through your classroom. Thank you. All right. So that's the balance sheet. And again, the question, we're doing what? We're doing the question for P Ming. Right, you're doing the question for P Ming. And you'll find the adjustments. These are the adjustments. There were some dots, so all I simply do was just to label them 1, 2, 3, 4, 5, 6, 7. Alright. There ended the tutorial class. All right, thank you. And I hope that you would have watched through the entire video, right? All right, guys.